Hey guys, good evening. This is Alex, Prime Trading. So I hope you had a great day. Hope you killed it in the market. So let's look at the PTMM app and see what the market is trying to telling us again tonight. So let's start with the S&P 500 once again. The prime model still in uptrend, obviously, with the recent day's action. So we're really seeing a classic V-shaped recovery from the lows, and I was really not expecting that at all. But that's why we keep an open mind and just follow price at the end. So once we reclaim those moving averages, we really saw some very strong action without any red days. So that's very impressive. So moving averages are now aligned. The uptrend seems to be well in place. So it will only be a question to see where this new market opportunity window will go. But so far, that's really constructive to see a lot of strength from the lows like that. Not seeing that we will continue each day and every day going up like that. We will certainly see some type of digestion through time or through price. We'll need to at some point with how short-term overbought we are and extended we are right here. But yeah, we'll deal with it when it comes. And so far, the market is only gearing up. So let's look at price. So RSP, so the equal weight S&P 500 is getting right into that July structure that we were discussing last night. So we had that mid-July and the end of July highs, which create that structure around 172, 173. So I will definitely look at this area tomorrow for a potential resistance. So if we see some type of breakout attempt and coming back in a bit like we did on July 17 and on July 31, that's the kind of action that will put me in some light defensive, meaning that we know that we are very short-term extended by momentum, by breadth, as we'll see a bit later. But knowing that we are short-term extended and overbought, when you see some kind of price rejection of a key structure area, that's when I tend to close some risk, the position that didn't get enough cushion to sustain some kind of pullback or digestion as they might come in with the market. Those are the first that I want to close. Just manage my risk, keep it at decent level, and wait to see if the market is pulling back or not. And if it's not, if it's true time and we're just going sideways and setups keep coming, and you see breadth and momentum coming off, then you just engage back. It's not because you close a position that there won't be any setups in the next few days or weeks. So for me, it's only a way to manage risk, right? So yeah, definitely looking at that structure tomorrow. Otherwise, breadth is still looking very solid. We saw a new high in the net new highs today. So very constructive there. McClellan Summation Index is still very steep. above the 10 moving average, which hooked up today. So this is really constructive. Not only the summation index is trending up, but the 10 moving average is starting to do the same. So that's very constructive for the mid and longer term of this market, in my opinion. McClellan oscillator is definitely also getting overbought and extended. So keep that in mind with your exposure. And the other clear indicator that this market is overbought is really the breadth extension. So we have stocks above the 10 moving average at almost 92%. This is really high. We have the stocks above the 21 DMA at 86.5%. So again, very high. So if we could look historically, so we had that last summer rally, which we topped in the 88, 90% of stocks above the 21 and 50% and 50 DMA, sorry. And same thing in November of last year. So we peaked at first around 85% on the stocks above 21 DMA. So just like right now. And then that's why I said that keep an open mind and play the setups first, because the stocks above the 21 DMA just remain in overbought for more than a month. So you don't want to close your exposure. You don't want to get too defensive just because the short-term breadth is extended and overbought. It took the stocks above the 50 DMA, so kind of a more midterm extension indicators to get in the 90% before the market really started to weaken and really pull back. So we're not there yet. Yes, short term we're high, but the stocks above the 50 DMA are still at 72%, so not overbought. And we do have the long-term breadth still pretty elevated, but that's very typical of a bull market. All right, so keep in mind, I think that V-shaped recovery is very constructive for the midterm. We certainly are short-term extended and overbought, so manage your risk accordingly, especially if we have a price rejection of that July's structures tomorrow. But other than that, the uptrend is confirmed. And apart managing my risk, I tend to focus way more into individual stock setups at this point, and not base a lot of decision based on the market. So let's look at the Nasdaq. Nasdaq made a really nice move today. So we were kind of struggling at the 50 DMA yesterday, and it was also the end of July structure high. And today we push right above the structure, right above the 50 DMA to confirm that structure breakout and that new high. So we had that downtrend structure with a new low, a low high, a lower low. And just right now, today, we made a higher high. So we broken that downtrend structure pattern, which is very constructive. And then we'll see if we can confirm that new uptrend when we do a higher low. And then we continue with that uptrend structure after that. So this is the same thing with breadth. So the McClellan summation index is still very steep above the 10 moving. We just hooked up as well today. McClellan oscillator very overbought, so keep that in mind. We're actually almost the highest of of the last year, so very overbought right now. And same thing for the stocks above the 21 DMA. We're now at 84%. We certainly have some room on the upside. We can't be more overbought, but this is entering the very overbought condition. What is a lot more overbought is really the 5-day ratio. So momentum is on fire in the last 5 and 10 days. And right now we have a 5-day ratio of 39, which is the highest ratio of the last year. So that's really something. So there's two sides to see it, right? We're either very short term overbought, but the way I see it is really as a clear bread trust from the lows as we confirm the break of that downtrend. So clearly there's huge buyers stepping in from the lows. There's good momentum. There's absolutely no downside momentum in the last 1, 2, 3, 4, 5 days. So there's just no sellers in sight. So that's very, very constructive. So yeah, same thing here. Very constructive for the midterm, but a bit ahead of itself in the short term. All right, so let's look at the sectors and themes. So yeah, same leading sectors right now: financials, utilities. So let's look at the mini charts real quick. Yeah, so utilities, we talked about that last night. We did confirm the structure breakout out of that mini range. So it's looking good. We reconfirmed the uptrend. There's some nice setup in that group. Let's drill down and see what the universe. All right, so we do have NRG trying to digest that recent uptrend above all moving averages. You have VST looking very good in that structure and getting very, very tight on the right side for a potential 50 DMA breakout and kind of a wedge breakout from here. We have the same type of action on CEG, Constellation Energy, and AES looking a bit more still downtrend and lagging. And you also have GEV, which is in my watch list. Also not able to get the chart, sorry about that. So yeah, GEV, if you can look into that chart tonight, that's definitely in my focus list as we lead the group. In my opinion, we've been able to break out of that multi-month base earlier this week. We are in the process to retest that base area. So a really nice setup going into tomorrow. This entire group is setting up well. All right, so real estate, another group that I'm engaged in: home builders, in construction companies. So there's really nice setups in that group as well. We did some moves today, but nothing too meaningful yet. So the other sectors are quite extended above moving averages. We're getting into these July structure as well. So that's the same type of action that we see on RSP, right? So RSP right here. So financials are retesting July structure. Healthcare is retesting that July structure. Same thing for communication services. and on and on and on. We're just right at resistance um, in a lot of sectors. So keep that in mind. Probably the most interesting sectors for me tomorrow will be technology. So it's been very strong from the lows, but we were very deep. So as the other sectors are quite extended already, getting into resistance, what I'll look for will be a potential rotation out of those leading sectors and back into technology, the electric utilities that we talked about. Biotechnology is also looking very primed for a move. So yeah, that's the kind of action that you can expect from a very strong bull market, where you have a bunch of sectors of teams leading, and then you have some key sectors like technology, semiconductors, etc., that are just lagging and building strength to take back the lead and get that nice rotation to get that uptrend going. So that's what I will look in the next few days if we can confirm that rotation. All right, so I'll keep it short tonight once again. Uh, I wish you a very good night. I hope that you get a nice day tomorrow. Trade them well, manage your risk. And yeah, see you tomorrow. Bye bye, everyone.